heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Caroline Hyde at Bloomberg's World Headquarters in New York.
And I'm Ed Ludlow in San Francisco. This is Bloomberg Technology.
Coming up, Peloton tumbling after predicting another decline in sales. We'll discuss where the company's comeback efforts went wrong.
The landscape for IPOs starting to heat up. We'll dig into Amer Sports, which starts trading today.
And the world's biggest seller of smartphone processors is starting to see a recovery. We'll speak to the CEO of Qualcomm, Cristiano Amon. But first, let's check in on these markets and a reprieve, a macro sigh of relief after yesterday. Look, we were rejiggered on our thoughts on the direction of travel of the Federal Reserve. It really felt that there was a different tone coming from Jay Powell, and certainly March being taken off the table for those rate cuts. But today we just bounced back a little bit. Big tech on top, and that's ahead of some key earnings that I know we'll be discussing with Ed in a minute. We're up 0.4% in the Nasdaq. China also saying we are committed to stimulating our economy, in particular trying to really focus on the semiconductor area over in China. We saw some big moves therefore in Chinese stocks, and actually it still flows into what's happening in those Chinese-related names trading here on ADRs in the US. The Golden Dragon China Index is what I look at. NYMEX crude up about 0.3%. This is again this is geopolitics at play. Some worries that we might see CBS reporting some focus on Syria and indeed Iraq coming from the US in terms of, well, overall conflict ramifications. We're up 0.2%. Move on and have a look at what's happening in the world of crypto, though. Bitcoin flat, but we did see a spike a little bit higher from on the lows of the day. 42,477 is where we trade on that particular risk asset. So in lockstep with where tech stocks are going, Ed. What have you got on the micro?
Look, I'm already thinking about what's going to happen after market today. I'm looking ahead to the three names behind me. From a sheer market cap perspective and the breadth of end markets and stories, this is mega. You know, you think about Apple, higher 0.9%. What is going on in China? We had a lot of concern at the beginning of the year about the outlook for 2024, but then Vision Pro started to come and we were like, okay, this might be good. What about the iPhone? It's a high bar quarter. We know that from what happened with Google and with Microsoft. Does that apply here? The AI story is relevant to all of them because in Apple's case, people are like, give us the AI story, particularly for the iPhone. But you know what the story is with Amazon, higher 1.5%. How is AWS doing in making LLMs available to the world, custom or Amazon's own? And then there's Meta. Forget social media, forget the metaverse. They want it to be an AI story, but in the context of advertising strength, have they used their competence in AI to boost their ad sales? That's really the core question. And then we go to the other end of the spectrum and we look at Peloton. It's an astonishing story in the sense of how far Peloton's fallen and continues to fall. The stock is down 23% now. It is a market cap of less than $1.5 billion. And the outlook is sales are going to continue to decline. Whatever this company does, frankly, it hasn't worked to get them back on track from a hardware or a software perspective.
It hasn't, and we're going to dig into that in a moment. Interesting, if we go stick in the world of sports and health and exercise for a moment. Amer Sports shares indicated at $13 to $14 each. The IPO price, remember, was $13. That's actually way off the mid-market range. So this is a company that's coming to the market, selling new shares. Of course, this is Wilson tennis rackets. This is like a Solomon ski boots as well, and a big exposure to China. We'll dig into that IPO story in a little bit on the show. But first, let's return to the woes that are really expressing themselves in the share price of Peloton today. Mark Gurman is here with more. And look, they can't seem to catch a break in terms of people wanting to use the app in particular. I mean, where are they seeing some of the pain points, Mark?
They're seeing pain points essentially everywhere. Free cash flow is not where they want. Revenue beat Wall Street expectations by about 20 million, but of course it was another annual decline for the company. App subscriptions were down 16%. They're still reporting a net loss. So this is not where the company once was. They were a high flyer at the height of the pandemic. They were a $1 billion plus quarter after quarter. Now their revenue, as you can see, was in the mid 700 millions, down 6%. EBITDA loss, just no real growth or momentum here for the company, and they're not expecting free cash flow to get to where they want, real profitability now, real growth until the end of the year, until their fourth quarter.
Right.
So certainly they're not in a good place at this moment.
Yeah, I think we're still asking what is Peloton, right? Is it a content company? Is it a hardware company? They've had all these different strategies. They include partnerships, the TikTok one being the most prominent that Kara and I have discussed. And then they turn around and say, you know what, let's look at universities. That's a big market, you know, from a gym equipment perspective. That hasn't worked either. So sum up Barry McCarthy's strategy here, Mark.
Yeah, the strategy is to go all in on content and subscriptions, but this big revamp that they rolled out a few months ago was a failure. It led to a large decrease in subscribers. They had some issues with their algorithm as well. You know, my personal take is maybe you wind down the hardware business completely. That's a lot of where your lack of profitability, a lot of where your net loss is coming from. Go all in on content, but then you're just an app. But I think if you're a pure content play, you have this really nice, really great subscriber base of nearly 750,000 users. Maybe that's something that's interesting to a Spotify or a Netflix or an Apple or an Amazon, where you can buy this pretty gigantic fitness content library. You can buy this application, you could buy the patents and the technology there, and you can make your Netflix subscription or your Spotify subscription or your Amazon Prime subscription more valuable and interesting to consumers by spending a few billion and buying all of Peloton's content arm. Maybe that's the real long-term play. At least if I was CEO, that's what it would be at this point.
Until you are CEO, Mark, we'll stick to our knitting on also the areas, the wealth of expertise you have in other companies. We are all waiting with bated breath some big earnings after the bell, and Apple is key among them. What are you expecting?
Yeah, so our estimates indicate that Apple is going to avoid a fifth quarter in a row of a decline, an earnings decline. That would be something that hasn't happened since the original iPod days over 20-something years ago. So any growth, I think, is going to be hugely impressive to the stock. What we're really looking for is a sizable beat on iPhone. If you remember, at the end of 2022, the iPhone 14 Pro ran into some serious COVID-related headwinds. So at this point, given the performance of the iPhone 15 concerns in China, given that this is a redesigned handset, given that they have not had any production issues, you should be looking at a pretty clear beat on iPhone. So that's what we'll be paying attention to, in addition to, hopefully for the company, a record around digital services, given all the App Store noise right now.
Highly recommend that you follow the Top Live blog on the terminal for Mark's reporting, and also his X, because it's a big Super Bowl moment for him after market close. Thank you to Bloomberg's Mark Gurman. But let's keep the convo going. Bring in Allspring Global Investments Chief Diversity Officer and Head of Active Equity, Anne Miledi, for more. You know, I said a little earlier in the show, and that if there was a lesson to be learned from Alphabet and Microsoft, it was that this was a high bar earnings quarter. Investors kind of wanted to see some tangible effect from all of the AI chat and investment of the last 12 months. Now we have Apple, Amazon, and Meta on deck. Do you frame this as a high bar quarter?
I do. Thanks for having me on the show. It's a high bar quarter because although fundamentals were really strong in 2023, multiple expansion also took place in a big way. And so when you have that multiple expansion and good earnings growth in 2023, the bar is now set for growth on top of what we saw, and that multiple expansion is going to be harder to get. And so I think that's where, you know, the game of expectations really comes into play.
There is other technology in the world outside of this. We call it the Magnificent Seven, and maybe Tesla gets taken out and it's the Magnificent Six. Are we not looking in the right place right now?
We think the market should broaden out. You know, we really believe that in the back half of last year, and as we look forward, we think that's true. Look, there are really good earnings prospects for several areas of the market. If you look at historic discounts between small and large cap companies, those historic discounts are really pretty wide. And you're right, there's really good companies technology companies, healthcare companies, other companies that go down market cap, that just don't have the multiples, that didn't get the multiple expansion, even some that have really high free cash flow, did put up good fundamentals last year. And so those are the parts of the market that we're much more attracted to right now.
Do the same drivers of growth apply, though, on the smaller side of the market capitalization? Is it that you want to hear from CEOs how they're leveraging AI, how they're thinking about cost discipline, how ultimately they're replacing people with machine?
Absolutely. AI is, not something that's going to go away. And I think we saw the first wave of it, certainly led by these large companies. I still think that the large companies are going to lead. But what we're going to do is start to see AI applications be applied across the broader economy. And when that happens, you're going to see productivity and other things continue to rise. But it does take a while for it to play out. And so we're looking for individual companies that are applying AI, but not just AI, also other tools, also other capabilities that they have to really work through the current environment, which we all know, is likely to be still a little bit bumpy here.
Let's talk about that current environment. End on the macro for us, Anne, because is it therefore the jobs data that you look to at the moment? Is it still any hint of direction of Fed policy that really dictates trade here overall?
I think the Fed policy, it's interesting. The Fed talk has maybe added a little bit of confusion, but the expectations for 5 to 6 rate cuts for the year were just higher than what we believed would actually happen. So yesterday wasn't so much of a surprise to us here at Allspring. What I would say, though, is we are watching the labor market really carefully and how that might be tied to company profits. And if we just go back to 2022, the technology companies actually were, cutting back on labor. Some of those Mag 7 stocks you talked about, that led them and set them up pretty well to produce good profits in 2023 with some recovery. We are, at the end of an inflationary cycle, pricing power starts to slip away. There starts to get to be some margin pressure amongst many companies. And so what then tends to happen is they start to unwind labor because that's where the biggest costs come from. So how closely are profits and labor tied? I think they're pretty closely tied. So we'll have to watch profits very carefully and within each industry, and then also what that might mean for the labor market.
There's been a lot of talk of cuts this particular earnings season when it comes to the labour force. Allspring Global Investments Chief Diversity Officer and, of course, Head of Active Equity, Anne Miletti. Great to catch up with you. And what have we got?
Well, coming up on the show, we're going to have a post-earnings conversation with AMD CEO Lisa Su. Really interesting AI name to watch right now. That's next. This is Bloomberg.
23 was when we established ourselves as, a key AI contender. I think 24, we're going to show just how capable and how much, AI is now part of, really the entire AMD story. And in terms of the other markets, look, I like PCs. I think traditional server is going to recover nicely.
Here's why AMD is optimistic. While revenue in the current period will be short of analyst estimates, the chipmaker's confident it's going to book more than $3.5 billion this year from its line of AI accelerators. That's up from its earlier projection of $2 billion. I caught up with AMD CEO Lisa Su yesterday to understand why. Have a listen.
When I look at the potential of AI, it is really the single most important technology innovation over the last 50 years. So AI has so much potential to change the way our businesses work, to change our personal productivity, to really change the way we do research and a whole bunch of things. From our standpoint, we see the AI TAM growing to upwards of $400 billion by 2027. I think from an AMD standpoint, you were at our launch, Ed, in December. It was a great coming out party for the AMD AI capabilities, and it's gone really well. I think our customer interactions, Our product qualifications, our ramp have gone really well. So we were able to update, some of our numbers this past week.
I think a lot of folks focused on that ramp and how it went in the quarter. You exceeded the 400 million that you told me about at that event. So it's $3.5 billion of sales this year for MI300. What's interesting here is kind of your ramp relative to what's happening on the supply side. And I wondered how big a factor supply will be in matching or beating that number in 24.
Yeah, absolutely, Ed. This is the fastest product ramp, in our history. So, we exceeded our numbers in Q4, over 400 million. We're going to grow into Q1, and we updated our full year forecast from 2 billion to 3.5 billion. The way we think about that is that's a customer demand statement. So that is customers that we've engaged in, who have made commitments to us, who have placed orders with us. We're planning for a much larger number as it relates to the supply chain. This is what we should do. We always plan for success. So, my view is it's still very, very early in the innings for AI accelerators, and particularly for MI300. But this is an opportunity for us to, continue to build a major growth driver as we work with our top customers on their AI plans.
That was AMD CEO Lisa Su. This is Bloomberg Technology. This is Talking Tech. Elon Musk is making moves to deepen his presence in Texas. After asking followers on X, he plans to bring shareholders in for a vote to shift its incorporation from Delaware to Texas. This comes after a Delaware judge voided his $55 billion compensation package. And in other news, this is something I reported last night, a battery plant in Nevada is in the works. According to our sources, the plant will use equipment from China's CATL, otherwise the biggest company making cells in the world. The move comes amid heightened scrutiny by Washington and collabs with Chinese firms. This is Bloomberg.
Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Let's get a quick check on these markets, Ed, because actually we managed to see a little bit of a bounce back in the tech stocks more broadly, led higher by some of the key names that are going to be reporting after the bell. We think of Amazon, we think of Apple, we think of Meta, currently up 0.3%. Indeed, Chinese stocks have been performing well on the tech side as well as more broadly across the Chinese market. This is, once again, the government's trying to commit to stimulating and indeed supporting the semiconductors area in particular. We're up almost a percentage point on the Nasdaq Golden Dragon Index. Meanwhile, 10-year yield down 7 basis points. Of course, this is we still try to digest the path of least resistance for the Federal Reserve. It doesn't look like March is on the table for an active month-to rate cut. Let's move on to the individual movers. As I say, Apple on deck for after the bell. We're up 0.5%, but could we have a fifth straight decline in revenue? We haven't seen those sorts of consecutive declines in revenue since all the way back to 1998. We've had 4 straight, but can they eke out that 1% revenue growth that the market is anticipating? Qualcomm off by more than 4%. We've got a key conversation coming with Cristiano Amon just in a few moments' time. But this is, they managed to guide that, look, mobile is recovering in terms of their chips. But what about autos? What about connected devices? Not so good. Peloton off by 23% after, of course, what has been a painful set of, well, lack of growth numbers once again. Meanwhile, though, we want to be talking about some other areas of sport, not just Peloton exercise area, but what about Wilson tennis rackets? What about, well, areas of, well, the areas of skiing for your boots? Amer Sports, they've just been IPOing. And look, it's below the marketed range in terms of the midpoint, but they are coming out, it seems to be pricing in the $13 to $14 per share mark. Let's talk about what this means for the rest of the IPO market and some of the tech names within it. Shonali Basek's with us. And what's interesting about Amer Sports is that they have big Chinese backers in particular. and they have exposure to the Chinese market. What does this read across the rest of the IPO market?
Yeah, listen, we did see this becoming the biggest IPO since we've seen Birkenstock, so big consumer names coming to market. It's not just about the Chinese consumer. If you look at where a bulk of their revenues come from, they're very heavily exposed here, Caroline, to the Americas, as well as the Europe, Middle East, and Africa region, the EMEA region. And so this is a very large global brand going public at a time where people are kind of worried about the global economy and the strength of the consumer. Now, some of these brands tend to lean more affluent, like Arc'teryx. Anyone who's bought Arc'teryx gear knows that you're paying a little more for it than, say, you are a Patagonia. But it shows in the numbers, and they've really been able to expand revenue as people get back on the slopes and back out there playing sports and traveling around the world for a lot of these types of categories here in athletics.
All right, Bloomberg Sonali Basak with the breakdown on Amer Sports. We're still watching that for the opening, but it's certainly one to watch. And don't miss later Sonali's live interview with the CEO of Amer Sports, James Zheng, which is coming up in the next hour. Let's keep it going. The IPO landscape is a conversation that we need to have, and we're joined by Greg Martin, co-founder and managing director of Rainmaker Securities. It's a curious one, right? Sports, I'm into my pickleball. So Wilson, that's an interesting read over. But the backers are some big Chinese tech names. Your view on what this is a signal to the market, this IPO from Amer Sports?
Well, I mean, it is a data point for sure. The brands that Amer Sports owns, are venerable brands, have been around for a while. The company showed good growth in both revenue and EBITDA, but it was laden with debt. It was a highly leveraged company, and the market has been punishing highly leveraged companies for a long time. Even though rates have come down, they're still relatively high relative to where they were a few years ago. And so I think the market is still taking a wait and see approach. I think underwriters clearly misjudged demand. In fact, in this case, what was interesting is 60% of the IPO was bought by insiders. Normally, that's a really strong signal that should stimulate demand. So this IPO is almost completely carried by inside investors. There was very shockingly little outside interest. So this is a data point. It's a different type of company. I think when we see some more traditional companies that are maybe a little bit earlier, but with real growth stories and unlevered, I think that'll be a better benchmark as to how the IPO market really is right now.
Is it a starter gun for the 5 or so actual technology companies that are waiting in the wings as IPO candidates?
Well, I wouldn't. It doesn't really feel like a big breath of wind when they priced 23.5% below the midpoint of their filing range. We'll see how they trade today. I mean, let's hold out a verdict until we see how it trades. But I wouldn't say it's a big starter gun. Doesn't mean the IPO market's going to close. I mean, we had another sort of poorly performing IPO last week with BrightSpring that's traded down 15% in a week and also priced below its midpoint of its range. But both of those companies, as I said, were highly levered. So I don't draw a lot of conclusions, frankly, from either of these two IPOs. I would like to see how, I think Reddit might be one of the next companies to come out. I would like to see how more traditional tech companies that are venture backed that don't have a long history and have significant leverage. I'd like to see how those companies price. So I don't think there's a ton to learn right now from either of these two IPOs.
Let's therefore focus in on the reporting that was of this week, that Reddit is looking at coming in the near future trying to get a sense of what market capitalization, whether it's $5 billion or so, which is a significant haircut from where they last raised money at. But you've been highlighting some of the names that might well come to the market as well as Reddit. You've got Stripe, Churro, Chime, Databricks, Service Titan. Are we likely to see some pain for previous rounds of late-stage investors, and what recompense do they get?
It's a really interesting question. Reddit's last round valuation was $10 billion, in sort of the height of the market in 2021. I think that given they've performed reasonably well, they filed for IPO at the end of 21. They said they were going to do $1 billion of revenue in 2023. They did, sounds like by reports, somewhere closer to 800 million. So they are growing reasonably well. But, I think that would suggest a valuation, in an IPO in the, 4 to 6 billion range. So how do last round investors who paid 10 billion feel about that? It'll be an interesting discussion between last round investors and current investors and potentially, IPO investors. But this is a problem that a lot of companies are facing. We saw, Instacart when they went public, they had a $39 billion, last round valuation. Then they went public at around $10 billion. So this is the medicine that I think companies are going to have to take to get to the IPO markets.
Yeah.
But we're going to see a lot of interesting negotiations between last round investors and underwriters at this point.
And the reason, Greg, we have your expertise on the show is because you are there helping make markets in pre-IPO names. And I'm interested as to what appetite is like at the moment, what sort of valuations you're tending to see in these transactions.
Yeah, I mean, we've definitely seen a significant drop-off in valuations over the last couple of years, with a couple of exceptions. Clearly, the AI space has been a rocket ship, as has the rocket company, SpaceX. So there's been a couple of exceptions, but generally speaking, we've seen, significant, devaluation in a lot of these high-flying companies. Reddit, we've recently seen trading, start to pick up a little bit as investors feel that an IPO is forthcoming. But we're seeing pricing in, just below 5 billion range. But as a general rule, we're starting to see a little bit of an uptick in both demand and in valuations. And I think that bodes well for, a healthy IPO market should, most of the other economic indicators sort of stay stable as they are now.
Oh, all about the macro sometimes too. Greg Martin, brilliant to get your perspective. Thank you, co-founder and managing director of Rainmaker Securities. Coming up, well, we're going to talk about the private market a little bit more. DataSnipper has just nabbed a $1 billion valuation on the promise of using AI to automate some of the more tedious tasks in the world of auditing. We'll get into it next with the CEO. This is Bloomberg Technology. Let's talk venture. DataSnipper has raised $100 million in a Series B at a $1 billion valuation. It's been led by Index Ventures in the round. The company uses AI to make audit and data reconciliation more efficient, basically serving users across brands like Deloitte, EY, Siemens. Here with more is the CEO of that business, Vidya Peters. And Vidya, I love in the release about this phrase, you say basically you've made their job fun for the first time. You're talking about customers, about auditors. Make it sexy for us. How are you making financial audit that much easier?
Caroline, first, thanks for having me here. It's a pleasure to talk to you about DataSnipper. It's an exciting day here, and here's why. Every day, you and I wake up, and we operate on trust. For the products and services we use, we buy the stocks we invest in. And yet there are armies of people behind the scenes making that possible that are essentially in thankless jobs. Audit has been under tremendous pressure. This is an industry that has seen unprecedented attrition. There are fewer people joining the industry, and there are more people leaving it. And there are the same number of hours to do the work that they have been doing. And yet the auditing standards have been going up. And there have been very few software solutions and tools built for auditors. And that's what DataSnipper looks to solve. We use AI to help automatically match a lot of data, whether it's structured or unstructured sources, to really validate some of the transactions that they're looking to cross-reference, to reconcile, to match, and to validate. Really taking hours, days of manual work and doing that in seconds for them.
Vidya, in your case, the why you raised money is interesting because your revenue growth is impressive. And my understanding is you want to go to all of those long-suffering internal audit folks that are daily worrying about Sarbanes-Oxley or SOX management compliance and controls programs. But why did you need $100 million to do that? Why couldn't you just do it off your own cash flow?
Ed, we absolutely could have done it from our cash flow. We've been profitable from the beginning and very proudly growing sustainably while doing this at a high growth. Here was an opportunity to accelerate our vision. It was about being able to build and ship great new products faster to solve more problems for our customers. It gives us the opportunity to expand. We're opening our first office in Kuala Lumpur and in Latin America while strengthening our presence in the United States. And it's about ensuring that we have the go-to-market muscle to be able to reach customers like your wife. So we couldn't be more excited to be able to serve customers across external audit, internal audit, financial control. Anyone who's looking to match and reconcile data, DataSnipper can be of help.
100 million. Where does that get allocated as to what you can do to get into the hands of more financial auditors right here, right now? Is it marketing? Is it people? What are the bottlenecks you're facing, Vidya?
The first is to be able to build and innovate products at the pace our customers need. The auditing industry has long been forgotten as a vertical. They are some of the most underserved customers. Some of the work that they are doing is so manual, you would be shocked that we are in the year 2024 and there are such few solutions built for them. And our agenda, number one, is to build as many great innovative products to solve as many problems for them as possible. And so all of our resources, time, and focus is on innovating.
All right, DataSnipper CEO Vijay Peters, $100 million Series B, $1 billion valuation. Good to check in. Thank you. Now, coming up here on the program, we're going to keep the conversation going around earnings with Qualcomm CEO Cristiano Amon. A lot to discuss about a number of end markets, what's going well and what is not. This is Bloomberg Technology. For our Bloomberg television and radio audience worldwide, more earnings, and this time Qualcomm delivering a solid earnings forecast for the current period, helped by a recovering market for smartphone chips. But some analysts also noting high inventory levels in other business lines, delighted to bring in Qualcomm CEO Cristiano Amon. And let's get right to the inventory narrative, Cristiano. So smartphone, you said the inventories have improved. The lingering concern is Internet of Things, which for our global audience is basically anything with a network connection, right? From industry manufacturing through to connected devices in the home. And you're saying that they're still working through inventories there. But because that business line is so broad, what can you tell me about where the inventories linger specifically, geographically, heavy industry, retail?
Very good. Ed, good talking to you. First of all, I don't understand where this inventory commentary is really coming from. We saw this, I think, in the press yesterday. Maybe I'll use this opportunity to explain. The majority of our business, handsets, we're working very hard to diversify the business. We're making good progress, but still the majority of the business, handsets. And handsets, we have seen that inventory had actually stabilized since last quarter. I think what we see in the results, especially with the beat and raise in EPS, is that handsets are getting back to normal. We're happy with the health of the Android ecosystem. Premium tier, it's strong with HN3, and we still see that in the numbers. IoT, we talk about industrial inventory actually before every other company. Actually, we were some of the first ones to talk about it. It's still a smaller percent of our business. We would like it to be bigger, but we had said that that is the lowest quarter, and we expect to see growth in the coming quarters. So, yeah, I don't understand this comment on inventory. We're happy with the results, and we're happy with a number of the analyst revisions that actually came out this morning on the stock.
I'm just reading the transcript from the earnings call, right? And you said second half of the fiscal year, as we see the inventory kind of normalizing in the IoT context. A positive area was China. You promised that we would get an uptick in China sales. We did get that. Does it reflect customers in China having been through inventories, or is this a commitment to forward ordering, signs that those end markets have demand?
Yes, this is a great question. And I want to start by saying we have two vectors that are very encouraging. One vector is the premium tier has proven to be resilient, even within the macro uncertainty. And it shows that users, when they go buy their next phone, they want a better phone. The second thing is we're starting to see the first innings of Gen AI. Some of the use cases are starting to come in, and that has brought some excitement. Some of our customers had record pre-sales of their new devices with HN3. And what we see in China right now, I think there was a lot of concern in the past about Huawei coming back to the phone business. But what's actually happening is Huawei is increasing the size of the TAM, and our customers are holding share and seeing opportunities in the premium tier, and that's reflected in the quarter. We have a lot of orders of HN3, especially for phones that launch or launching in the market. We're happy. We're just cautiously optimistic since we don't know how the second half of the year in phones in China is going to unfold.
Cristiano, how do you navigate geopolitics when it comes to China, not just macroeconomy?
We just do business. I think we focus on what we can control. I think we're happy that we have a strong relationship with China. Our technology is differentiated and is helping, I think, both sides. One, it's business, is export of semis for the U.S., for China. It has been growth for technology. We have not been impacted to date by any of the restrictions. And as we diversify the company going from handsets to automotive and industrial, I think we see our China business expanding as well.
Let's go back to the bread and butter that is phones, though. And I think about Apple's earnings coming after the bell, everyone wanting to get some sort of steer on where the consumer is at right now. And ultimately, you've said, look, we're recovering in phones. But how excited are consumers to renew, do you think? And how much will this manage to carry you on into the rest of 2024?
Look, we don't want to make a prediction. Phone cycles is very difficult to make predictions. There are a couple of things that we know it will happen. Once every 10 years, you have a generation of wireless. We've just been to the 5G transition. But the early signs of Gen AI use cases are actually exciting. I think you saw Samsung launching S24 with a number of Gen AI use cases running on the device. Same thing happened in China, just mentioned about that. So that could create an interesting opportunity for upgrade cycle in phones. It's just hard to predict the timing.
For our Bloomberg television and radio audience, we're speaking to Qualcomm CEO Cristiano Amon. Cristiano, you and I have talked about on-device processing of generative AI tools and running of large language models, on-device airplane mode. When does that business that you're involved in show up in the financials?
Yeah, the way you should think about the financial impact, especially if you think about phones, is really a premium tier becoming a larger percentage of the market, and we're kind of starting to see that. And then the other one is more silicon content. I think our ASPs increase on the chipset, and that has a positive contribution for the business. And the dynamic that we see with the success of 8 Gen 3 is just the first signs of the opportunity. Just to be cautious that we still need to see a lot of use cases develop.
Lots of partnerships and deals kind of talked about on the call. When we think about names like Apple and Samsung and the handset makers in China, look at the history of Qualcomm. Can you kind of guarantee investors that you can continue forward on the deals and avoid the legal entanglements you've had in prior years?
All right, so you mentioned partnerships. I think we have two very important conversations, and I want to make a distinction. I think the first one is our licensing business. And we have been saying that the licensing business, which has been the reason we have been in a number of disputes in the past, is very stable. It's one of the most stable times that we had since the beginning of the licensing business. And in the quarter, we announced 3 very important milestones. One is we saw an extension of the Apple license agreement. That means that Apple is paying license for the Qualcomm standard essential patents, and that's regardless of using or not using a Qualcomm chip. We also saw 2 Chinese significant customers renewing the license agreement, which speaks to the value of the Qualcomm intellectual property portfolio, even in China, in the middle of the geopolitics. That's a very positive sign to investors. Now, the second part of the question is about partnerships. What's exciting about Qualcomm, and I know we spend a lot of time talking about handsets, but auto, there is a lot of reports on the peers of a decline in auto. If you look at this quarter, we actually had record auto revenues with 31% growth year over year when the whole market is down. And that speaks to the number of chips we've been making in auto for the future of the automotive industry. And that's an important metric where the future of Qualcomm is going to be.
Still about that diversification. Qualcomm CEO Cristiano Amon, great to have some time with you. We thank our radio and TV audiences. That does it from Bloomberg Edition and Bloomberg Technology. Do remember to look at the podcast.